This week, we're going to look at what is money. And to get us started in our discussion about what is money, let's consider what we need money to do. So money is a medium of exchange. We accept it as payment for goods and services. It's a store of wealth. That is, we can hold on to it, and the more we have of it, the more we can buy in the future. And it's a unit of account. It's a way to show what things are worth compared to something else. So let's take a look at a couple examples of what we might consider money and then dig into, are they really money? So we need money to be a medium of exchange, a store of wealth, a unit of account. So let's look in particular at Bitcoin and gold. When we think about Bitcoin and gold, think about, would you accept Bitcoin as payment? Would you pay for services with Bitcoin? Would you save for retirement using Bitcoin? And we could do the same thing with gold, accept gold as payment, pay for services with gold, save for retirement using gold. That'll help us identify whether these are money. So let's start with gold. So as of October 2021, 1 ounce of gold is $1,783.90 Canadian. So you can see the trend of gold over time, and it's high, maybe not quite the highest it's ever been. Okay, so as we think about gold, we go back to our discussion here of, would you accept it as payment? When you go to the grocery store, can you pay for your groceries with gold? Will they accept it? If they won't accept it, then it's not money. It might be a way to save for retirement, right? You can purchase gold as an investment. The more you accumulate of it, you can sell it in the future for whatever it's worth at that time and then buy things with cash. But will people accept gold in exchange for goods and services? So for example, an F-150 Raptor is at 87,630 Canadian MSRP. In order to pay for the F-150 in gold, you would need 49 ounces of gold. And so what you see in the picture circled in green is about 49 ounces of gold. So it would be more than one bar and about a third of another. So let's look at the other item, which is Bitcoin. If we wanted to buy the same F-150 Raptor in Bitcoin, we would need just over 1 Bitcoin to pay for that $87,000 truck. When we look at Bitcoin, you can see that as of October 2021, one Bitcoin is worth $83,145.51. Is Bitcoin a medium of exchange? Can we use it to buy stuff? Is it a unit of account? Can we use it to see how much things are worth compared to other items? Now, there's been some discussion over the last year or so about Tesla, for example, accepting Bitcoin as payment for their vehicles. That would make it a medium of exchange because you could use it to get stuff, and a unit of account because we know how much the Tesla vehicle is worth based on how much Bitcoin it is. We could look at how much Bitcoin would be something else and compare them. Now, in the summer of 2021, Tesla stopped accepting Bitcoin as payment for vehicles, and that's because of the volatility of Bitcoin. So here in the top graph, you can see for the first couple months of 2021, that Bitcoin really ranged from being worth 1 Bitcoin for $57,000 to 1 Bitcoin for about $85,000. So that's quite a big change, a big swing in just about 2-3 months' time. So is Bitcoin a medium of exchange? Are people willing to accept it in exchange for goods and services? Well, Tesla said for now, they're not going to accept it anymore. Is Bitcoin a store of wealth? Can you buy Bitcoin, hang on to it, and buy more things in the future? Well, assuming it keeps going up in value, you could sell the Bitcoin for Canadian dollars and then buy things, in which case it's more like an investment like stocks and bonds, or even how we treat gold currently. The key here is whether or not you can use the Bitcoin now as a medium of exchange to buy things, and whether you'll be able to use Bitcoin in the future to buy things. So we need our money to be a medium of exchange, a unit of account, and a store of wealth. Let's continue to explore Bitcoin as money, because what we're seeing is countries like El Salvador are actually adopting Bitcoin as the money for their economy. So El Salvador, and this was June of 2021, said that Bitcoin is now going to be their currency. Now, it created some problems. So here's an article from CNN that talks about there's some issues when El Salvador switched to Bitcoin. And that's the fact that the price of Bitcoin plunged 19% in a single day. When we look at our currency, Canadian dollars, US dollars, whatever your currency is, we'd like it to be pretty steady. We need people to have faith that it will buy things today and it will buy the same things tomorrow and months later. So the problem with Bitcoin is that volatility. They also had other issues in terms of the electronic apps needed in order to make that exchange work. So here the Chivo wallet was an app in order to track and buy and sell your Bitcoin wasn't working. There are some other challenges with Bitcoin. So Bitcoin and other types of cryptocurrency, many of them can be mined. So the amount of currency available is dependent on finding them. Essentially, there's an algorithm your computer crunches until it can to discover essentially those cryptocurrencies. So what we have is right now in our society is that you can't buy an Xbox or a PlayStation because all of the video cards are being bought up for cryptocurrency mining. Everyone's is on the hunt to find the cryptocurrency through this mining process because it's free money. Well, it's free money after you pay for the electricity and the video, the graphics cards and all that to do the mining. And so one of the challenges as we look at climate is the amount of energy, the amount of electricity or other types of energy that's used in order to make all these server farms, these computers work to find that cryptocurrency. The challenge, though, in terms of the valuation of Bitcoin or other cryptocurrency is that the more people mine, the more cryptocurrency is then available, supply increases, and that can push downward pressure on the individual price of a Bitcoin. And so we do see a lot of fluctuation in Bitcoin value because it's really being determined by supply and demand. If we find more through mining, that increase in supply will put downward pressure on the Bitcoin price. If more people are wanting to use Bitcoin to buy things like Tesla, then of course the demand goes up and the price goes up. So Bitcoin is functioning more like a commodity with supply and demand than necessarily a currency. As we'll look more into that when we look into monetary policy and supply and demand for money next week. All right, so let's just chat about some of the other challenges with Bitcoin. Because the price is set by supply and demand, there can be pumping and dumping. So what we see here with the pump and dump strategy is that there is that volatility in the value. So what we see online is people are encouraging others to buy Bitcoin. That increase in demand drives up the price, And then those who were trying to create the sense of urgency online can sell their Bitcoin at a higher price and essentially dump their cryptocurrency. So it can be manipulated by encouraging others to drive up the demand so that you can then sell off your Bitcoin at a higher value. So it's subject to manipulation. There are different types of Bitcoin. So I just want to point out a couple different ones to you. This is an article from Sophie, an investment company, about some of the different types of cryptocurrency. And so when it comes to Bitcoin, for example, the amount of Bitcoin that can be eventually discovered, mined, is limited. So at some point, the amount of Bitcoin can't drastically increase in value overnight from mining because there's only so much, there's a finite amount available. Right now, as we increase, as people go mining, that does change the value, demand changes the value, but ultimately you're going to hit this point at which all of the Bitcoin has been mined. Ethereum, another type of cryptocurrency, does not have a limit to the amount of cryptocurrency that can be created. So it doesn't have that upper bound, that maximum amount, and it could continue to change. People could mine it, and so again, more volatility could happen in the future. We said that if something is money, it must be a medium of exchange. People must accept it in exchange for goods and services. Some companies are creating their own cryptocurrency and accepting it as a medium of exchange within their organization. And so this Binance coin is a medium of exchange on Binance. When we look at other types of cryptocurrencies, there is an intention to make it less volatile, to make it less, because if people really are going to use it to buy and sell items, they need to know what it's worth now and that it's still going to be worth that same amount next month, next year. So what you have is the emergence of stable coins like Tether and USDC or USD coin. These are stable coins, meaning they are tied to a fiat money. So the USD coin is tied to the US dollar at a ratio of 1-to-1. The Tether is also pegged to fiat currency, in this case the US dollar, but there's the ability to not necessarily make it a one-for-one exchange. So the idea with these cryptocurrencies is to get them to function a bit more like money in terms of more stability, so people will accept it as a medium of exchange, a unit of account, a store of wealth, but at the same time have the benefits of cryptocurrency, which is that ability for there to be this electronic transfer. We don't have to have physical money. And there's the additional security of the handshake, essentially, that one party will agree to pay for a particular service, another will agree to provide that money, and the money doesn't actually exchange until all parties agree. So you don't have the risk like you do with currently with money, which is you do a service and you hope they will pay you after, or you pay ahead and you hope they will do the service. And so the benefit of that cryptocurrency is in that kind of handshake to hold the money until both parties agree. The interesting thing here about this USD coin is that Visa has announced that they would accept it as payment. And so if you can start to give bigger companies, Tesla, Visa, other organizations, to accept it, then that medium of exchange, people will recognize it as money and use it as money. There are some risks with cryptocurrencies. There are lots of them out there. One, for example, is Quadringa X. This was a cryptocurrency that was in Canada. Now, the challenge with this particular cryptocurrency is that the creator of the cryptocurrency died, and nobody else had access to how the cryptocurrency was being generated. And everyone who had bought the Quadringa X, they couldn't do anything with the cryptocurrency. They couldn't trade it for anything. The company went bankrupt, and people who had this particular cryptocurrency lost all their money that was associated with it. So the challenge, of course, is we have lots of different cryptocurrencies is, can we trust them? Will they still be around in the future? Will we be able to access them and use them to buy things and get paid in them? So when it comes to choosing what is money, if you're thinking about Bitcoin, if you're thinking about gold, we need our money to meet three purposes: medium of exchange, store of wealth, unit of account. We also prefer money that has certain characteristics. It just makes it better money. It's acceptable. It's durable. It's portable. It's divisible. We can buy big things and small things. It's homogeneous, so we don't have preference. The money doesn't have different values depending on how it looks. It's recognizable, again, because people are not going to accept things they don't recognize. And we need it to not be easily copied. The idea here is that if we can just print our own or mine our own, then the value will constantly change. So in order to get people to accept it, it needs to have value now. We need to be able to trust that it's going to have value in the future. One way to maintain that trust and ensure that there's an amount that's appropriate for our transactions, but not too much that it loses value, is to have some kind of central authority like a central bank that is going to determine that supply. When we looked at our supply and demand graphs before, we saw how that supply could change as people mine more Bitcoin. A currency like the Canadian dollar, the Bank of Canada can set that supply as fixed and have it not move around as much, in which case the value is only based on demand. So as you think about what should be money and whether Bitcoin or cryptocurrency is the money of the future, think about those key questions we started with. Would you accept it as payment? Would you pay for services with it? Would you save for retirement using it? Does it make good money?